So I received an email today from Robinhood. Now, Robinhood is a brokerage app that you can use on the internet, on your computer, on your laptop, or on your smartphone to invest, trade stocks, ETFs, some cryptocurrency. But this email that I received from Robinhood says, your cash has so much earning potential. And it says that they offer 18 times the national average savings rate, 4.15% APY annual percentage yield. And it gives some information here on how to take advantage of this opportunity with a program that they offer through the company's app through Robinhood, which is called Robinhood Gold. So, Robinhood Gold is free for the first 30 days, and then it's just $5 a month thereafter. And then this basically, I'll read it to you verbatim. It says, "Hi, Kevin, your cash has so much earning potential at 18 times asterisk, the national savings average. Our all-time high rate of 4.15% APY on uninvested cash can put you way ahead of the game. Upgrade to Robinhood Gold today and see what's possible. Your 30 days are free, then it's just $5 a month thereafter." There's a link here to start earning, and then it says that Robinhood Gold also includes Morningstar Pro Market Insights at a fee of $35 a month, or at least a $35 a month value. I'm not sure if they're charging that. And then it says level 2 market data for NASDAQ, bigger instant deposits, and more. So this has got me thinking, is this a good idea? Is this an opportunity that people should be taking advantage of? Although in order for this to actually pan out, you're going to have to spend $5 a month. So in theory, you're going to have to do the math and determine just how much you'd have to have in uninvested cash on the exchange, on the platform, to at least cover the $5 a month fee with the 4.15% APY. But it actually made me think about a much more important and quite possibly a much bigger question that is probably being asked more so than, should I leave uninvested cash in Robinhood to earn 4.15% APY in savings, or where do I get the extra cash anyway to save? As it says here, according to this news headline, savings getting tapped by Americans to make ends meet due to inflation, and household budgets have been shredded by high inflation. Now, folks, do me a favor and just comment down below if you are in the category of, I have excess uninvested cash that I would not mind seeing a 4.15% APY return through savings on Robinhood Gold, or if you're of the latter category and your savings is being tapped like most Americans, and you're struggling to make ends meet due to inflation, and you're seeing your household budgets being shredded by high inflation. Now, I want to talk about this news article, but I also want to talk about Robinhood and what I see as a potential problem. Because what Robinhood wants you to do is exactly what I encourage folks to pay very close attention to, and that is security. Remember, my 3 pillars: diversity, security, and cash flow. And in this particular situation, leaving uninvested cash on an exchange, regardless of what it may be, could potentially leave you vulnerable. I just want to put that out there as a little bit of a disclaimer. Now, this is not financial advice, but we are talking about a financial topic. Now, it says here, according to this article, it says that unrelenting inflation is continuing to take a toll on Americans. And about 27% of U.S. households reported taking money out of savings in order to make ends meet. So I know that 27% is not 100%. So there's 73% of people out there that theoretically and potentially could have this surplus, this excess of disposable income and this cash lying around that he could potentially put into the Robinhood Gold savings feature and get this 18 times the national average market rate of return on their savings. With that being said, though, very, very interesting move on Robinhood's part. I'm not sure about the future of Robinhood as a company and their ability to maintain a profitable balance sheet at the end of the year, but they are definitely giving it the good old college try to try to entice more people to the platform. I was having a conversation the other day with G.I. Justin, and he was saying that the downfall of these apps is the fact that they don't charge for the trades, and it puts them in a bind for being profitable and having ways of producing revenues and ultimately net incomes, which is a huge part of business, folks. If you're in business and your business isn't turning a profit, then really you are just funding a hobby or subsidizing someone else and whatever it is you may be doing. So in my opinion, your business has to be profitable and has to make money. Otherwise, there's really no sense in doing it unless you are doing charitable donations. Now, where are we, folks? 2023, it's March already, which is really kind of unbelievable when you think about it. The year has actually flown by pretty quickly, and we are just a few days away, or at least I am, from my birthday. Getting older. It's always fun, right? But where are we really in general as a community, as a network, as if we were to try to gauge the majority of viewers out there watching the content that I create, the videos that I post and upload, and their financial situation, where are we? Because this excess cash, this uninvested cash, which honestly, to be quite honest with you, a lot of folks are telling me that they're not invested at all for the most part, from the emails and the messages that I'm receiving on Patreon and folks looking to get started investing for beginners, and they have never even invested before, maybe just outside of a 401k by their employer. But, is there an abundance of cash lying around that people are sitting on and wondering what to do with it? Or is it the exact opposite? And more so in line with what this article says here, because it says that about 54% of the 27% who tapped their savings said they did so in order to pay for basic expenses like groceries and rent. So these don't sound like people to me that are in a position to have excess and abundance of cash lying around on exchanges like Robinhood, looking to take advantage and capitalize on these APY, these high yield savings account returns. Don't forget, you got to pay $5 a month. But it also says, according to the chief financial analyst at Bankrate, Greg McBride, that inflation has shredded household budgets over the past 2 years, and not just when it comes to one-off discretionary expenses or special occasions, but for just keeping up with day-to-day bills. It's kind of ironic, because today I actually came across a few different articles as I was doing my research and my studies and just myself trying to make sure that I'm staying ahead of the curve and doing all that I can to continuously progress with everything that's going on. But I came across a few different creators today and a few different videos on YouTube. And one of them was talking about a ridiculous amount of money that somebody paid to finance a 1992 Ford Focus or Ford Escort or something. I don't know. It was a crazy amount of money. They were paying like $250 a month, $249 a month for 82 months on this Ford Escort. Ridiculous. And it's a sign of the times of where we are today, interest rates, recession looming, lurking, cusp of a recession, on the brink of a recession, the Fed continuously raising rates, the housing market in shambles, and now we're seeing the automotive industry having their lots filling up with inventory, which just kind of gives you just like a bird's eye view of like from a 30,000 foot look into how the consumer has changed now, today, 2023, almost, the tail end of the first quarter of 2023, and the consumers' spending, shopping habits and or ability has changed drastically. So where are we, folks? Because I just want to know, because this is going to help me tailor and cater my content to you guys and what matters to you most, what information you need soonest to obviously maintain awareness and education and be intelligent on the subject matter that's going on a daily basis, but also to prepare. Because if you are part of this collective group of this fraction of the American population that is being wiped out and struggling from inflation and burning through savings to try to get by, then we got some more important tasks ahead of us to plan and prepare for than just trying to capitalize on this Robinhood Gold opportunity for 4.15% APY on your uninvested cash. Because if you had uninvested cash there, then there's no way you'd be tapping savings to pay for basic necessities and food and groceries and rent. It also says here that millions of Americans stashed away extra cash during the pandemic as a result of multiple stimulus checks, boosted unemployment benefits, and limited spending options. So, these limited spending options were basically, that was the beginning of the problem that we have now, which is why we're seeing so many job cuts and layoffs for companies like Amazon and Walmart, and Best Buy, and Bed Bath & Beyond, and, Wayfair, to all these online companies that were trying to do their best to ship as much as they could to people making purchases while sitting on their couch, idle hands, just scrolling through their phones, through their tablets, through their laptops, and just buying up anything and everything that they thought that they wanted because they had the ability with the amount of money that was being pumped into the economy through these stimulus checks, low interest, unemployment benefits. The list went on and on. But now that merry-go-round is coming to a halt. The music is stopping, folks. And in this game of musical chairs, like I told you guys before, there's going to be far more people left standing around when the music stops than chairs are available. And unfortunately, it says here that those savings are quickly dwindling. And I know that for a fact, there's a lot of folks out there that never even received multiple stimulus checks, let alone even one stimulus check. And, to even have this as a topic of discussion today, March of 2023, that money's long gone for the most part. For the most part. I know there's some people out there that use it for good reasons, and they have actually used it to benefit themselves in tremendous ways. But I would say that for a vast majority, a lot of folks were happy to see the money, but it was already spent before they got it because they're in a tough financial situation, which brings me to that other video that I watched today, which was apparently there's a collective group of people directly associated with or just opinionated from outside looking in that do not agree with Dhar and his practices of how he runs his business, how he treats his members or his cast members, and their complaints and gripes of not being able to earn a living wage. Now, I don't want to get into that in this video because I feel as though it deserves its own dedicated video for the discussion of that. But when you take that and you add it to what everything else that's going on, a recession, inflation, savings being, depleted, higher prices across the board, cost escalations left and right. And then you add on top of it, folks having struggling a hard time to earn a living wage. It's a recipe for disaster. Now, I will touch on it just a little bit because I do want to say that oftentimes the earning potential and income received, for instance, if you were an Uber driver, or better yet, Walmart Spark or Grubhub, and I'm not speaking from experience, I'm speaking from what I believe is how the app and the gig work works, or it's designed to work. And basically what it does is it shows you the opportunity. For instance, if it were Uber or Lyft, it would show the fare. But if it's Grubhub or Spark or DoorDash or something like that, maybe it just shows the earning potential for the pickup and delivery. As the contractor, as a 1099 contractor gig worker for these alternative means of informal income producing opportunities, side hustles that a lot of people doing on the side, a lot of people doing it full time too. But basically, when the opportunity presents itself, you don't have to take it. You get to choose whether or not you would like to take it. And obviously, time is of the essence. So, if you let a good one sit too long, I'm sure it will be gone soon by somebody else. But even still, I would imagine that the bad ones sit on the app longer because they're not worth it. They don't pay enough. And I feel as though this is a very similar situation to the Darman situation and to a lot of folks who are struggling to earn this living wage or a reasonable living wage. But yet, for some, there's a choice. You see what I'm saying? So, like I said, completely separate video, but sometimes you got to make a choice. And that choice may mean foregoing something that is less lucrative and, pursuing something that'll be way more lucrative for your time compensation, while also working towards reducing your break-even overhead monthly expense, which will have a direct impact on what you would consider a living wage. Because I know a lot of people will consider a living wage based on a lot of excess expense that they don't need. And if they were to eliminate this and work on drilling down on their budget, then what they would need to earn for a living wage would obviously be a whole lot less. I digress. If you guys want to talk about that, let me know. We can do another video. But it says here, according to Fox Business, that consumers are increasingly relying on their savings and racking up credit card debt in order to pay for necessities. The personal savings rate tumbled in December of last year to 3.4%, which was down from 7.5% 1 year ago, as households pulled back on spending amid a cloudy economic outlook. I mean, there's no doubt that the economic outlook is grim for most, which is why I try to provide you guys with as much information so that you guys are aware of what's happening, what's coming down the pipe, what's going on, and most importantly, having options of ways to prepare. In the last 3 months of 2022, credit card balances increased by $61 billion to $986 billion. And the total U.S. household debt, meanwhile, climbed to a record $16.9 trillion during the fourth quarter, which was an increase of 2.4% from the prior 3 months period. Needless to say, this is not good. This is not good. And if I just had to make a prediction, it's probably going to get worse. Yes, you would like me to say before it gets better, but I don't know if that's necessarily the path that we're on. Now, granted, some people may have their opinions about 2024 and, what could be the changing of the guards, so to speak. Only time would tell, but even still, that's quite a long time away. So, in my opinion, if I'm of the percentage of the population of Americans that are suffering with high inflation and tapping into savings and backing myself into a corner and racking up high amounts of credit card debt balances that I obviously probably can't even afford the minimum payments for, I need to figure out a plan. I need to hammer down on my budget. I need to find ways to save money. I need to find ways to make more money. I gotta get out of this hole, because everything that I'm seeing here is indicative of an economic disaster, a financial collapse at home. Okay. And I don't see any real means of support coming from what we had previously seen during the height of the pandemic. Therefore, just being straight up, just being honest with you guys, you're on your own. So I would love for people to be in a position to be able to say, I have uninvested cash that I can put towards a high yield savings account opportunity like Robinhood Gold at 4.15% APY and earn 18 times the national average savings rate, asterisk. I would love for that to be the case. Now, I also want to stress the security component there and allowing money to sit on an exchange and its vulnerability. But at the same time, there are some fail safes and protections that could be in place, as well as making sure you maintain a strong level of diversity. So that's where we're at, folks. But I want to know what you guys think. I want to know where the collective group is. I want to know where everyone's mind is at. I want to know what everybody wants to know and what they need most to help them get prepared for what is likely to be a continuation of an increase of interest rates pushed by Jerome Powell, Federal Reserve Chair, a continuation as we move towards a recession that, top economists and analysts and bank CEOs like Brian Moynihan are preparing for, as well as how do we get out of this situation where we're paying, ungodly amounts of interest on ridiculously old used cars just to get by. Folks, that also ties into what I was telling you guys about with this living wage and Darman and working these gig work apps like Grubhub and DoorDash and Uber Eats and Walmart Spark. You have to make a choice. Now, granted, sometimes your choices may be the lesser of two evils, but at the end of the day, you still have to make a choice. And if your choice includes financing a 25-year-old car for a ridiculous amount of money for some 82 months, that's definitely going to be upside down as soon as you drive it off the lot. So I really hope you get gap insurance, and odds are the car will probably be repossessed because you're not in a financially strong and stable position. Therefore, you're probably already skating on thin ice, which at the same time, this isn't necessarily the evil and wrongdoings. For instance, ironically, metaphorically speaking, Robin Hood, stealing from the rich and giving to the poor. Because even at the height of the pandemic, when money was essentially free, the rates were as low as we've ever seen. If you had bad credit, if you had poor credit, if you had derogatory marks on your credit, if you didn't have substantial income, well, guess what? You didn't get an opportunity to take advantage of these money savings and investment opportunities by being able to borrow virtually for free. But at the end of the day, you still have a choice. And if the choice is to buy a car cash or pay a ridiculous amount of money in interest and ridiculously high monthly payments for 82 months, you still have to make that choice. So perhaps maybe that's where we're at, folks. Maybe we need to have a way to be able to make better choices. Let me know.